Hello, good evening, everybody. How are you doing today?
Good evening, sir. Doing
Good
fine.
evening, sir.
Yeah, I want the class to get at least to a full capacity before start. So
Good
just give
evening.
yeah. So by 7:40, I will start by God's grace.
I won't be using money on nights now. All of them can use money on nights. It's written on it. So now they even go out. But the guy, they're also on screen after. But I don't really go out. No, sometimes, but I don't
Please
get
mute your
rubbish. I
mic.
don't tire.
Mute your mic,
Most
oh,
times,
mute
I
your mic. You never mute your mic.
So I'm just Hello, can you hear me?
Yes, sir.
Yes, yes.
I wanted to say first that so this is how we'll be having our class going forward. I pray that we won't have any reason to have any class postponed again. And if we continue with this momentum, we will actually we'll definitely cover up what's we missed in those periods. That's one. But two, should in case you would want to have a corporate training on tax or IFRS, and you feel it's something I can undo, I am available for those kind of engagements. So there's another thing I just felt it's important for me to share. All right, so that said, let's get into uh let's get into the class basically. So in the last class, we started to look at. Sorry, can you hear me?
Yes, sir.
Yes, we can.
So in the last class, I think we stopped at. Can you see my screen?
Yes, sir.
Yes.
So I was at last class. We stopped at explaining what is allowable and disallowable, taxable and non-taxable. So in reality, the list is inexhaustible. The list for allowable and disallowable expenses is inexhaustible because of the way we operate basically. But it is good that we have a basic idea of what it is. And another beautiful thing is that the more we solve questions, the better for us. So the number of questions we solve will determine um, how confident we are going to be with those items. But again, what are allowable expenses? Allowable expenses are those expenses that are only reasonable, exclusive, and necessary. So that's typically what we say they are rent. So what are the examples of those kind of expenses? One, you'd have rent. Number two, rent for business
Trade,
purposes. Number two, you have specific provision for bad debts. You have specific provision for bad debts. You have donations to approved bodies based on Schedule 5 of CETA. You also have salaries and and wages. You have transportation costs for the business, for business purposes, etc. So these are types of the allowable expenses. So let's look at these allowable expenses. These allowable expenses are those expenses. Please confirm that you can still hear me.
We can hear you,
Yeah,
sir.
we can hear you, sir.
We can hear you, sir.
That are not allowable. Basically, if it is not allowable, then it is disallowed. Number one example is capital expenditure. That's expenditure that are capital in nature, purchase of equipment, etc. Those are disallowable expenses. Number two, you have depreciation. You have loss on disposal of non-current assets. You have loss on disposal of equipment, uh, donations to unapproved bodies. Right. So we have are we still together?
Yes, you
General
are
pro-
with me, sir.
for bad debt, renewal of long lease, right? Renewal of long lease, and so on and so forth. So, like I said, it is inexhaustible. But as we solve questions, we will keep on getting them. So, let's go to taxable income. So, taxable income earned in the ordinary course of business. So you have one, gains from business operations. Number two, are you with me? You have balancing charge, not taxable income. Obviously, those are gains that are not going to be taxable. When we have profit on disposal of non-current assets and investments. But we have dividend received, because withholding tax on dividend is the final tax. So another thing we will continue to look at as we solve questions. Does it make sense? Yeah, go ahead. You have a question? Please go ahead. So let me accommodate your question one after the other. Yeah. So we have Julie.
Okay. Good evening, sir.
Good evening.
My question is on short-term lease and long-term lease.
Okay. So
So please
short.
tell me a legal fee on short-term and legal fee on long-term lease. I want to know if it's an allowable expenses.
So anything long term, legal
Mm.
fee, the renewal is disallowed, provided it's long term. What it means by long term is that it is capital in nature. That's your what's the name now? Finance lease. That's what we call long term lease in tax, right? So it is capital in nature, and for that reason, it's disallowed. But short lease is like your operating lease, and so it is short tenured, and for that reason, it is allowable. So anything short term lease can still be permitted, while long term lease is disallowed.
Okay, thank you. How about retainership for
It,
lease?
it's not, so it depends on the nature of the lease.
Okay.
So the same thing will still apply, long term, short term. So it depends on the nature of the lease.
If it's sorry, what if there was no specific attachment, like to show if it is short-term or long-term?
So you can always assume that lease is long term.
Okay, thank you, sir.
You're welcome. Johnson.
Yeah, good evening, sir.
Good evening, sir.
Yeah, please, I want you to talk more on donation.
Okay.
Fifth schedule of
Yeah,
CETA, donation,
I was going to
most
talk
times.
about. So let me
Okay,
just
okay,
what
so yeah,
once and
thank
for
you.
all. So donation naturally, the guiding rule is that it must be Schedule 5 of SITA. But again, Finance Act make it a little bit simple for us to determine donation, right? So donation must pass three tests or four. So conditions for granting donations. Number one is that donation is made to approved bodies based on that schedule that I made reference to before, Schedule 5. Two is that donations made for the purpose of natural emergency, basically. So you have natural disaster or crisis or war, to a fund approved by the government is allowable, but must not exceed 10% of accessible profit. Number three thing is donations must be made out of profit. And number four is donations made to tertiary institutions approved by the government. That means the tertiary institution must be approved by the government for the purpose of donation, right? But must not exceed 15% of accessible profit. Number next is that donations should not be capital in nature, should not be, but that is not really a rule of thumb, basically. So let me just remove it. So that is that. Have I clarified? Johnson, have I answered your question?
Yes, sir. Yes, sir. Thank you.
Yeah. So another question before we move on. Yeah. Tina. Uchina.
10% of 15% of accessible profit.
Eh?
What is 10% of accessible profit or 15% of accessible profit?
So there are two different things. Tertiary education is 15%, while natural disaster and war is 10%.
Okay.
Yeah. People.
Okay, sir. You said good evening, sir. You said donation should be made out of profit. Is it the accessible profit or the
You
adjusted
know my
profit?
profit. At least you have in profit making. You should not give what you don't have. So if you make loss, why are you donating?
Okay, okay. Okay, I get now. Thank you, sir.
Welcome. And naturally, once you are profit making for in an accountant's point of view, there's no way you will not be profit making in tax point of view. There's no way. There's no way a profit for a accountant can become loss for tax. Like I've not seen it happen before. So yeah, that's good. Favor, your hand is raised.
Yes, sir. Please, can you recap the rates again? The one Mrs. Sushina asked you.
10% for bond, 15% for tertiary institution.
Okay. Thank you, sir.
Income. So let's quickly solve. Let's play with some questions. May 2022 question 1. So who is reading? Am I alone?
No, sir.
No,
Go ahead,
sir.
sir.
I should
No,
go
sir.
ahead. I'm
Yeah,
waiting
let's
for you
read.
to read. You said I should go ahead.
Compulsory
Um,
questions. Dadankwa Nigeria Limited has been in business
So
since 2000.
let's read the requirement first.
Okay. Require requirements required. As the company tax consultant, you are to draft a report to the managing director for the scheduled meeting expected to hold next week. This is expected to address the following: A. Determination of the company tax liabilities for the relevant tax year. B. Comments in line with the provisions of Companies Income Tax Act (Cap. C21), Law of Federal Code 2004, as amended on 1. The treatment of donations made by the company during the year under review. 2. Exemptions of dividends from taxation.
Okay.
The question. That's the requirement.
Mm.
Tedankwa Nigeria Limited has been in business since 2009 as a manufacturer of sugar cubes. The company sources sugarcane from the northern part of the country. However, due to activities of some miscreants, which prevented some of the local farmers to go about their farming activities, the company has been facing a lot of issues in getting the needed raw materials for its operations since 2016. The company has issues with tax authorities on the treatment of some items, such as allowing, disallowing donations and dividend received at will. In the financial statements submitted and annual returns filed, the high overhead costs, particularly energy costs, make the operating environment not encouraging. In order to address this unpleasant business situation, the board of directors of the company, at its special meeting held recently, decided to close business operation temporarily or in the long run relocate to a neighboring country if the situation does not improve in the coming financial year. As the company tax consultant, you are informed of the decision of the board by the general manager when you visited the company to obtain documents that you intend to use to conduct tax audits and file statutory tax returns in respect of the just concluded year. He was of the opinion that your professional advice would be highly needed as he did not want the organization to go on temporary closure need you
next year.
next year or relocate to another country. In the course of your discussion, you suggest you
He
suggested ways by
suggested.
which you suggested ways by which issues raised by the board could be addressed. The general manager was pleased with your informal submissions and decided to inform the managing director. A meeting has been scheduled between the managing director and your firm next week. The profit or loss account in respect of the operation of the company for the year ended 31st December 31, 2021 is as below. Tedankwa Nigeria Limited statement of profit or loss for the year ended 31, 2021. All figures are assumed to be correct. Okay. Extract from the company state of financial position as at 31st, 2021 revealed non-current assets, current assets, all figures are assumed to be correct. The following additional information was made available. Miscellaneous income was made up of all figures assumed to be correct. Can you please scroll up, sir? Sir, can you please scroll up? Okay. All figures assumed to be correct. I think that's finished, sir.
Okay. You're on larger level because I was expecting to read interest on loan, general admin expenses, donation and subscription. But if you still want to assume that all figures are correct, I just hope everybody has read alongside too.
Let's start reading. Let's see then.
Did you say that? What did I hear?
Let's
Can
read
I?
it now for us to understand it better.
Okay, let me read it.
Donations and
Donations,
subscription.
donations and subscriptions included in donation was 12 million naira paid to a fund created by the federal government for victims of communal crisis that took place where the company is situated. The tax written down values of the, sir, can you remove your cursor there, sir? Hello, sir. The tax written down values of the qualifying capital expenditure items as at 31st 2020 were qualifying capital expenditure, industrial building 2016, number of items 1, amounts 84,000. Manufacturing industrial plan 2018, number of items 2, 28,000. Motor vehicles 2019, number of items 2, 14,000. Furniture and fittings 2019, number of items 10, 2,700. Additions to qualifying capital expenditure during the year ended 31st December 2021 were motor vehicles, number of items 1, amounts 4,500. Furniture and fittings, number of items 3, amounts 1,200. All relief capital allowance brought forward was 15,200,000. Unabsorbed losses from previous year were tax year 2017, 8,290,000, 2018, 4,380,000, 2019, 9,800,000, 2020, 13,600,000. Finish, sir.
All right. So thank you. That makes thank you for answering. So what I will do for you is I will solve the question, but you will be writing the report. Because I believe everybody in this on this call should be able to write a draft report. Is that correct?
No, sir.
That's not
Yes,
correct.
sir.
Yes, sir.
Mhm.
No, sir.
No, sir.
So I was
No,
thinking that
sir.
No,
No,
sir.
sir.
okay,
No,
let's
Abby.
let's
No,
let's
sir.
vote. Let's vote. Let's vote. If you're able to write a draft report here, please raise your hand.
Okay. Plenty.
We rig the election. We write it for us, sir.
We rigged the election. You've rigged this election already. Because only 5 people raise hands that they are able to write. So okay, let me change it. If you are not able to write, please. If you are not able to write, please raise your hand. Come on. You guys rigged this election true. So let's see how it goes. No problem. You guys APC'd me. No problem.
Sir, 5 is greater than 100. Oh.
Eh?
5 is greater than 50.
5 is greater than 50.
So the essence is for us to pass. So
Yeah, correct. I agree. No problem. We'll pass. So for 2022 year of assessment, do you agree? Because it's going to be on preceding
okay.
year basis.
Thank
Abi?
Yes.
Good. I'm sure nobody has issues with the heading, Abi. And the name of the question I'm solving is studying COA. Dadinkoa Nigeria Limited. So let's quickly put some numbers together. So we'll start from net profit, but in this case, what we had is loss for the year. Abi? Please, I want your participation so that the class will not be boring.
Yes, sir.
Yes, sir.
Yes.
How much is that? 6,530. So add disallowable expenses. What are disallowable expenses? So salaries and wages is allowed if there are no additional information, right?
Yes.
Then electricity and lighting,
It's
rent
allowed.
and rent is allowed if there are no additional. Electricity and lighting is also allowed. Transport and traveling is allowed. Stamp duty for increase in share capital is disallowed because it has to do with a balance sheet item.
Yes. Yes.
How much is that?
1,500.
1,500. Auditor's examination is allowed. Legal and professional fees is allowed. Repairs and maintenance is allowed. Allowed
Allowance without
products
this.
is allowed.
But there is an
Right?
information on it.
Depreciation. Yes, I will read the information. I want to treat what we have here first before going to the information.
All right, sir. And
So
depreciation
depreciation
is
is
disallowed.
disallowed.
35,600.
Right? Then you have
Interest on loan.
interest on loan is allowed. But you know there's a rule that it must not exceed 30% of your EBITDA. But don't worry, we will treat that. General and admin expenses also allowed. Donations depending. But loss on disposal of equity shares is disallowed.
It's disallowed.
Yeah, it's disallowed.
Yes. That's
Investments.
1,750.
1,750. So let's now check the body of the question. So note 1. Miscellaneous income, we've not treated the income yet, so I can skip that. We were told that. Can you hear me?
Yes, we can hear you, sir.
Yes. Yeah.
We were told that our legal and professional fees include 1, debt collection expenses is allowed.
Yes.
Then tax consultant professional fees is also allowed.
Yes.
Renewal of
It's allowed, please. Yes.
It's allowed.
fees
Retainer fees
allowed.
Yes.
Retainer fees allowed because that's what you pay your consultant.
So they
Yes.
are all allowed.
Yeah. So repairs and maintenance includes improvements to building.
Not allowed.
Yes.
It's allowed because it's
Please, can
It's
yeah.
Yes.
capital in nature.
Yes, 700.
their mics now can be hearing him clearly.
Your network is bad. I'm not sure they're doing affecting it. They are talking, I cannot hear you very clearly. So it could be your network. Please, can you hear me?
Yes, we
Yes.
can hear you, sir.
Yes,
We can hear you.
Yes,
we
I
can
hear you.
We can hear you, sir.
Yes, I can hear you.
Repairs, good. Repairs of industrial plants is allowed. Is allowed.
Yes.
Renewals of tool and implements is also allowed.
It's allowed.
Tools are small item. But construction of companies building gates is allowed. Because
Capital in nature.
900.
it is capital in nature.
Yes.
Allowance without debt consists of general provision disallowed.
Provision disallowed.
17,400. Specific provision is allowed. Bad debt
Yes.
written off is allowed. Bad debt
Bad debt
recovered
recover.
is also
It's
a
added back.
taxable income. Is a
Yes.
taxable
Should be
income. So
added.
it's
Yeah.
fine.
It should be added back.
Let's go to interest on loan. Interest on loan was on a facility obtained from a license to is allowed. Let's leave that. Interest on loan is allowed. Then general admin expenses were made up of vehicle running expenses allowed, insurance premium allowed,
Okay.
Loud.
then
Insurance.
fine for driving expenses disallowed.
Disallow.
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 Any fine or penalty,
It's disallow.
right?
Disallow.
970.
Fine and penalty is avoidable, so should be disallowed. Other administrative expenses is allowed, right?
Loud.
Now,
Yes.
donations was 12 million naira, but don't forget that
It
to a
must
fund
not
created
be
by the
more
federal
than
government, it must not be
10%.
more than 10% of accessible profit. But this guy
Yes.
made loss in this year, so it raises a concern for me. Do you understand? It raises a concern for me here. So I will say
Yes.
donations, I will disallow it because
Yes.
donation must always be made out of,
Oh, accessible profit.
yeah, and
Talking
must not exceed
10%.
12%, 10% of accessible profit. So I have
Yes.
12,000 here. But please hold on for me. I'm still going to retreat this donation again. So I will treat it again. But this is the first treatment. So we have tax sitting down value. So I think I'm good to go. Is that correct?
Yes, sir.
So let's add everything together. What do you have?
Oh, you added the donation.
Yes, I add back the donation.
So I thought the donation should be maybe 10%
Yes,
of
that's why I
the
said don't
accessible
worry.
profit.
I will retreat it again. But
He
this is the
said he will
first time.
come back and treat it.
I said I will
7320.
say that again.
7320.
7320. So less non-taxable income. So let's go.
6420.
So let's go back to the non-taxable income and then pick our numbers. So we have turnover, opening inventory, gross profit, miscellaneous income. Miscellaneous income on the face of it is taxable. But let's check what is the makeup of the miscellaneous income. So I have excess on revaluation of investment. That's notional, right? It does not, there's nothing, there's no substance there. So it's non-taxable, 770. Then you have dividend received. Don't forget that withholding tax on dividend is the final tax on dividend, right? So in this case, what you would typically have, in this case, what you would typically have as your dividend received will be 3,460. Now, the question you ask me is, if it is gross, will you convert it to net? If it is net, will you convert it to gross? That's a question I typically get most of the time. The logic is very simple. Whatever is added initially is what you should deduct. So if what you have is dividend received gross, deduct dividend received gross. If whatever you have is dividend received net, deduct dividend received net. The idea of non-taxable simply means that whatever has been added before is not taxable. Does it make sense? Then other income, the examiner is not.
Please come again, sir.
So I was saying that this dividend received net, somebody may want to ask me that, what if it is gross? Should you convert it to net? Please, whatever was added is what you should deduct, whether gross or net.
Okay.
Do you understand? Whatever was added, just deduct it. So
Be the
now let's
person.
add the two together. Please press it for me.
4,230. 4,230.
230. So then we now have what looks like our accessible profit now. Figure me.
Join, 59560.
So let me call this accessible profit excluding donation.
Mo fi phone rẹ call lọ́jọ́ yẹn gan, mo fi pe níyì, mo ti pe lẹ́nu ó ti
Please mute your mic if you're not speaking with me. Laugh your phone call. So say that again.
I will off your mic.
59560.
59560. So now less allowable donation. Don't forget we said donation should be 5%, Abby.
Yes.
No, it should not exceed 10%, Abby.
10%, yes.
10%.
No, it's 10%.
10%. So you say
10% of the accessible profit.
Accessible profit, yeah.
over 110 times 59560. What do you have?
59.
5414.
5415.
5414. 5415.
5415.
15.
Sorry, is anybody hearing him?
No.
I think we lost him.
No.
We did lost him. It's 2%.
I think those that are raising hands, so if you have any question, maybe you can drop it. Something anybody knows can share. That's my opinion.
Oh, sorry, please. While he comes in, please can someone help me answer the question? How did they get the accessible profit excluding the nation? Thank you.
Hello, Daniel. Can you hear me? Hello,
Yes, I
Daniel.
can hear you.
Okay, so
I
I
can hear
think
you. I
what
can
is
hear you.
okay. I think what he's trying to do is, since the rule is that donation should not be more than 10% of accessible profits, so what he did was to first disallow that donation that was given, and then test to be sure that that is testing using the 10% of accessible profit to be sure that if the one he did, the 10%, 10 over 110 times the accessible profit, if the value is going to get is higher than the earlier donation, the difference will be disallowed. He will add it back. But if what he gets, the second donation, is less than, then in that case, he will not allow it. I don't know if you understand what I'm trying to explain. So he needs to first disallow that donation because he's not sure if it is more than 10% of accessible profits. So first disallow it, then test for it, and then compare the donation gotten, the second leg, and the first donation.
Okay. Thank you. Thank you.
Hello, please. I want to ask. So this, which means that the 10% now is on markup. Abi, because it's supposed to be like normal 10%, but I'm saying 10 over 110 there, which means it's markup the idea.
It's markup. It's
Okay,
markup.
thank you.
That's the reason why it's 10 over 110.
All right, thank you.
Welcome.
Sorry, please, I want to ask this donation in the statement of in the account, we have donation and subscription as 15,000. However, additional information, they now told us that 12,000 was made to flood victim. So why are we using the 12,000 since there was no additional information on the remaining 3,000 to make up the 15,000?
I didn't get a question.
That's the reason. Okay.
So, sir, my ask was in this statement of account, we had donation and subscription as 15,000. Then in the
Yeah.
additional information, they went further to tell us that 12,000, that's 12 million, was was donated to flood victims. So my ask is, we have a difference of 3,000 now. There was no any further information on the remaining 3,000. So why are we limiting this donation to just 12 million rather than the 15 million we had in the statement of accounts?
So now, subscription on the face of it is allowed, right? Subscription, donation and subscription is what you have. Subscription on the face of it is allowed. The examiner now tell us that what you have here is donation and subscription. Subscription pattern portion, we've agreed that subscription does not have any problem, is allowed. So that means 3,000 is allowed. Of the 12,000, 12,000 is to a fund donated and created by the government. I know there's a rule that it must not exceed 10% and it must be made out of profit. So because of those two rules, that's why we added back only donation, since subscription does not have any condition attached to it, but donation was the one that has issues attached to it. Does it make sense?
Yes, it makes sense. Thank you, sir. Please, I have
You're
another ask.
Yeah, go ahead.
Okay, so my second ask would be on that dividends. So I know you made some explanation regarding the net and the cross, and you said we should adopt whichever one was given to us. But I want to ask, let's say probably we are expected to compute minimum tax on, in the account. Let's assume that we are to go ahead to compute minimum tax. Are we to use the net dividends or we are to convert to cross?
It is the dividend given you that has been added to the turnover that you should also use. You know that there is turnover on the assumption that the turnover is including dividend, then less frank investment income. Does it make sense?
Yes, it makes sense.
So,
but what's the difference between the net and the gross? Which of them has the withholding tax and which of them doesn't have the withholding tax?
The net is without withholding tax. The net is without withholding tax. while the gross is with including tax.
Okay. All right. Thank you, sir.
You're welcome. Any other question?
Yes, sir.
Yeah. Please go ahead.
Yes, sir. Please,
I
regarding this donation, sir, I see that you use 10 divided by 110 as
Yes.
the accessible profit. But in the condition of
Yes.
donation, first aspect of it, you say 15% of the accessible profit. I don't really get it, sir.
Hello, sir. Hello, sir. Hello, sir.
Hello, sir. Can you hear me?
I'm hearing you, sir. Hello, sir. I think 15% of the accessible profit is for tertiary education. Donation made to tertiary
Okay.
institution approved by the government must not exceed 15% of accessible profit. But for company, it's 10% of accessible profit.
Please, though, from what you said earlier, you said the notions are made to approve body, and you are saying for companies. For companies, I don't think they are approved bodies. If you are saying, because what you said earlier is 10% is for government bodies, but if it's for tertiary institutions, 15%. That's what I heard. So I don't know if I heard a different thing from what he said.
That is what
Look
he
at,
said.
look at what he said there. Look at what he said there. He said the nation made for the purpose of natural disasters, crisis and war is 10% of accessible profit. So if you are making any donation to any company because of natural disaster, crisis, and war, it should not exceed 10% of your accessible profit. But any donation that is made to any tertiary education institution should not exceed 15%. So what differentiates this thing here is natural disaster to any
And tertiary
company
institutions.
should be 10%, and tertiary institution 15%.
So can donation be taxed with net profit? Can can donation be taxed with net
Hello,
profit?
can you hear me?
Yes, sir.
Yeah, sorry, I
Yes,
was trying to
be-
answer your question. Did you hear my response to your question?
No, sir.
No, sir.
Okay, so what I was saying is this, donation is the idea we are working on here, right? But in determining this accessible profit, donation was already disallowed. So if donation is disallowed, then it means that you have to mark it up, meaning this 59,560 is donation inclusive, right? So if it is donation inclusive and donation is 10%, so it means 10 over 100 plus 10, because 59,560 is donation inclusive. Does it make sense?
Please,
Does it
can
make
you come
sense?
again? Your line is breaking. Can you come again, sir? Sorry.
What I was saying is this: it should be 10 over 110, because you had already disallowed donation in the first place. You've already disallowed this amount.
Yeah.
But this amount is the amount you are working back to get. But this 59,560 is already inclusive of this amount. So to adjust for this amount you've already included, you have to do over 110, meaning that you're marking it up. There's donation already inclusive here. So this 59,560 is inclusive of donation.
Yes.
Do you understand?
Yes, sir.
So, and don't forget that the idea is accessible profit must include, must not exceed, donation must not exceed 5% or 10% of accessible profit. So you must look for a way to adjust for this figure such that donation will not be included. That way, you will not be double counting.
Okay, I get it now, sir. Thank you.
Yeah, you're welcome. Another question?
Yes, sir. Sir, my own is on a stamp duty. Why is the stamp duty allowable in shares?
Okay, so stamp duty on increase in shares is this thing is balance sheet item, is capital in nature. That's why anything balance sheet related will be disallowed for tax purposes.
It's okay, sir. Okay, sir. Thank you, sir.
All right, another question? I think we're good.
So can you test donation with net profit?
The idea is simple: is 10% of accessible profit and not net profit. Yeah. So now let's go ahead to accessible profit. Accessible profit is how much?
Five four one 4 5.
5 4
1
1 4 5. All right. So less loss relief. You remember loss relief? Please hold on a minute.
Stella, mute your mic, please.
All right, so let's go ahead. How much is the loss relief? You know, losses can be carried forward indefinitely, right? So you can always add everything together. So what do you have? Help me.
36070.
36070.
Like this. So what do you have?
Yes, sir.
What do you have?
18075.
18075. All right. Make sense? So now let's quickly go and then compute our capital allowance. Workings. Computation. Can you see my screen?
Yes, sir.
So let's quickly do this. I'm sure you've not forgotten capital allowance.
No, sir.
Good, makes sense. Wait, sometimes English is always difficult for me to understand, kind of. Then is it no, sir, you've forgotten, or no, you've not forgotten?
No, sir, we've not forgotten.
Okay. Both of them are no. So manufacturing, industrial plants, motor vehicle. Are you still with me?
Furniture and fittings.
Then we have total.
Go and call Lucky. Call Lucky.
So let's go ahead. So we have investment allowance, initial allowance, and annual allowance. Plants enjoys that, so that's 10%. Initial allowance is 15%, 50%, 50%, Abby, 25%. Is that correct? Annual allowance is 10%, 25%. Please confirm that you can still hear me.
Yes, sir.
Okay. 25% and 20%. So let's quickly work on this. Please listen up so that we will be fine together. So we have cost. No, we don't have cost first. Let's deal with the taxes now value. Now remember, better still, let me do a table first to analyze this thing so that you understand it once and for all. Remember that I was talking about how to determine the useful level of an asset. Do you remember? So let's look at hello.
Yes, sir.
Yes, sir, we remember.
Okay.
Yes, sir.
Plant, motor vehicle. Okay. Then furniture. Let me just use this table to explain it once and for all. So if you go by your calculations, ideally, the building is expected to use 10 years. Right? Useful life of a building should be how many years? 10 years, right? Plants should be 4 years. Motor vehicle should be 4 years. Furniture should be 5. Yeah, somebody entered into this house. Into this. So
Sorry, sir. So how do we get to this year, sir? This useful
so
life
it's
for which one?
100 divided by the annual allowance. 100 divided by annual allowance. So 100 divided by annual allowance will give you the years. Do you understand?
Yes, I think it's good.
But
That for the purpose of exam, the annual allowance rate will be given. Are you?
yeah, the allowance rate will be given at the last page of the question paper.
It's okay, sir.
So you don't need to cram at all.
Okay.
All right. So years used. Years used now. This asset was acquired in 20. Taxes and value of these assets. So this asset we acquired in what year? 2016, Abby.
Yes,
Yes,
2016.
sir.
Yeah.
Yes,
So
sir.
Build in
how many
2016.
years has it used now? 17, 18, 19, 20, 21. How many years has it used that way? 5 years. Abby.
5 years.
So this asset was purchased in 18, right? 2018. So you have 19, 20, 21, right? So how many years has it used that way?
3 years.
Good.
3
3 years.
years.
3 years.
That easy.
So motor vehicle has 19, right? So you have 20, 21. How many years has it used?
2
3 years.
years.
So this furniture too has used how many years? 2 years. Abby? So 19, so 20, 21, that's 2 years already, Abby.
Yeah.
Yes,
So
sir.
remaining useful life. So how many years will be remaining? You are supposed to use 10.
5
You've used 5
years.
already. So how many years
5
is
5
remaining?
years.
5
How
years.
many
years.
years? Yeah.
5,
1,
1,
How many
1
years?
years.
2 years.
2
and 3
and
years.
3.
Good, makes sense. So you see, it's very clear, Abby.
Please, I have a question on it.
Yeah, go ahead.
Okay, so I understood what we have done, but my ask would be, see this year of acquisition, we have 2016. We don't know the month, if it's January or December
It
it
doesn't
was
matter. Don't forget that annual allowance is not prorated down to the number of months you acquire the asset. It's only prorated in the case where the basis period is not up to 12 months. So it doesn't matter when you purchase the asset, actually. Provided it's a full year basis period, then you are good to go. And besides, it's an ongoing business. So you don't need to prorate in this case. So you have no issue with that at all.
Okay, so why do we count up to 2021 if is the tax written down value as at 2020?
No, there was a mistake in the way the examiner gave you that figures there. So there is a mistake. What you should do with is 2022 year of assessment. And so what you just need to do is just to compare the year of acquisition with the year of assessment. That's all.
Okay. Okay.
Does it make sense?
All right. So this 2020 year is wrong.
It doesn't. What I mean is, it doesn't impact the question anyway.
Okay. Okay. Okay.
It doesn't impact the question.
All right. Thank you.
You're welcome.
Sir, please, I have a question too.
Go ahead.
Sir, please, this investment allowance,
Yes.
I know that is not applicable, and this is 2022 years of assessment. Are we going to work on the investment allowance?
So the inapplicability, if there's any word like that, I mean, it's not applicable beginning from 2023 September. 2022 is before September 2023, so it's at this time it was applicable. The date informs everything you'll be doing as far as tax is concerned. Does it make sense?
Yes, sir.
Have I answered your question?
Yes, sir. Thank you.
Sorry, sir. Can you repeat yourself? I don't understand. Do you mean that for this year, investment allowance is no longer applicable?
Yes. For which year? Say that again.
This tax year, 2024 tax year is no longer applicable.
Yes.
So when was that stop? Sorry, sir.
September 2023.
Thank you, sir.
All right, makes sense. So let's go on. So now the examiner said that what he has given you is the tax return value, right? So that's where that becomes applicable, right? So what's the tax return value of these assets? 84,000, Abi? 28,000.
14,000.
2,700.
2007.
Then addition. You know, we had additional assets.
Yes.
Can you-
You have
So let's check.
additional assets.
So we have
Motor
additional motor
vehicle.
vehicle. What are the assets?
Motor vehicle.
Motor vehicle,
4,500.
alone.
Furniture and fittings 1,200.
Now, there were some assets that were purchased during the year, or there's some items we disallowed because they were capital in nature. Do you remember?
Yes, sir.
So let's look at those items that were disallowed
Industrial
because
building. Improvement to industrial building.
improvement to industrial building. So how much is that?
700 naira.
And we also have construction of building gates,
Construction
Abi.
of, yes, 900.
So
That's 1/6.
let's do it this way. Let's call the building gate non-industrial building. That gate non-industrial. It doesn't change anything. You know, the rate is constant for industrial and non-industrial. But just to show that the person who taught you is chartered accountant, you get. So it shows your excuse. So the gate is 900.
Sorry, sir,
Abi?
why are you adding it from?
So because they are capital in nature and they should enjoy capital allowance. The reason why we didn't disallow them was because we felt that they were capital in nature and they should have capital allowance. Does it make sense?
Yes, sir.
Yes, sir.
All right, so let's do initial allowance. So what's 50% of 900?
135.
135.
What's 15% of 700?
105.
105.
So what's 50% of 45? Don't forget, it's only a new asset, Abi.
Yeah, 250.
Then 25% of 300, I
300.
think. Total figure.
Two 790.
Let's go to annual allowance. So let's quickly deal with the annual allowance. I think we can do annual allowance to make it easier. So you have 900 minus 135 divided by 10. What do you have?
76500.
76.5.
500.
Is it not 900?
900 minus 135.
It's 76.5.
Yes, that's what I wrote. So for this guy now, for the industrial building, so we have the old assets. So for the old asset, I will say 84,000 divided by 5. Abi?
Yeah,
So what do I
that's
have?
16.8.
16.8.
800.
Right,
And then
16.8.
for the new asset, for the new industrial building,
59.5.
I will say 700 minus 105 divided by 10. What do you have?
59.5.
9.5. So when you had 16.8 plus 59.5, what do you have?
16,859.5.
That's 16,859.5.
Sorry, sir. So I'm a little bit confused.
Okay.
But we already calculated this non-industrial building.
So I'm done with I'm on industrial building now.
Yes. So how do
Yes.
we get 84,000 divided by 5?
So this table showed us that the remaining useful life of the asset is 5 years.
Okay.
So since the remaining useful life is 5 years, you just divide it by the remaining useful life.
Okay.
So that's what we did.
So the new building, for this new industrial building, we are using the old useful life.
Correct, because obviously it has not used any life before.
Okay. Thank you, sir.
You're welcome. So now for this industrial plant, it's just 1 year remaining, Abi.
Yeah. So
So if it is 1 year
minus
remaining, all you just need to do is to make sure there's 10 naira in the books, right? So you have 27.
999.99.
You remember?
Yeah.
Because you
Yes.
must
Yes,
always
sir.
keep 10 naira. Yeah. So motor vehicle, you have 2 years remaining. So for motor vehicle, so you will do 14,000 minus 14,000 divided by 2, right? That's 7,000, Abi.
Yes, 7,000. Yes.
Then we have 4,500 minus 2,250 divided by 4. What do you have?
562.5.
562.5. So when you add the two together, what do you have?
7,562.5.
It's 562.5. Are we getting it?
Sir, please, for that manufacturing plant, is it 1 naira you remove or 10 naira?
10 naira.
10 naira.
All figures are in thousand. That's why it looks like that. Furniture and fittings. So yeah.
Okay.
2,700 minus 1,200, Abi? No, sorry.
Divide by 3.
2,000. Yeah, divided by 3, sorry. What do you have? That should be 900.
900. Yes.
Then you have 1, 2 minus 300 divided by 5, Abi?
Yeah.
Yes,
180.
sir. 180.
180.
That's
1,018.
1,018 naira.
So let me add it up.
$1,980.
So don't worry about all these things. Is the tax is the total allowance that I need. So what's the total
Sorry,
allowance that
the total for the figure for the total is not correct, sir. Please.
so what's the total figure?
53,578.49.
So that plant is 27,990.
It can't be 990. All figures are in thousands.
27,999.990.
Is not so all figures are in thousands, so you have to convert it to normal before you deduct your 10 naira. What the law permits is not 10,000, it's 10 naira. Does it make sense?
Hello, sir.
Yeah.
On that motor vehicle, the number of
Yeah.
item is 2. So I think the amount supposed to be 20 naira.
Okay. Hold on a minute. Yes, that's correct.
It's 2 items, sir.
That's correct. Thank you. So that's for it. Okay, go ahead. Table. Yes, please come in.
Okay.
So what's the total?
So we are here to charge investment allowance.
Good evening, ma. Investment allowance on what?
The plants.
The
Investment
plants
allowance is only charged on new assets.
Okay.
Okay, go ahead, total.
How do you get
So
the
remove your cost
annual
of
allowance
this.
of the industrial building of 16,000 and not 25 and not 25?
56,368.48.
56 383
368.48.
368.48.
48.
Okay, good. We're good, Abby.
Yes.
Zuda, give me figure. So less capital allowances, Abby. So how much is the capital allowance? 56
368.48.
368.48. So don't forget that capital allowance is restricted, but you have to check the nature of the business. So what's the nature of the business?
It's agriculture.
It said is a
It's a
manufacturer.
manufacturing business.
So since it's a manufacturing business, it is restricted to the amount that is available.
So we have capital allowance brought forward.
Okay.
Yes.
Yes, 15,200.
Yes, it's
Capital allowance.
capital allowance brought forward is how much?
15,200.
100. So we add together, what do you have? We add the two together, what do you have?
71,568.48.
0.48, right? This capital allowances for the year. Now, so since it's manufacturing, you can take the whole of the figure, right? So it's restricted to 18075. 075. Right?
So please, can you explain more on this manufacturing and restricting it to the full amount here?
So capital allowance is restricted to two-thirds of accessible profit, apart from capital allowances for manufacturing and agro-allied businesses. So in those cases, you will restrict the capital allowance to the total amount available to be utilized. Do you understand? So what I'm saying is that you can take the whole of the capital allowance if the profit can accommodate it, right? In this case now, if so what I have in this case is 56 and 71,568.48. 71,568.48 is way above 18,075. So because it is way above 18,075, I can take the whole of 18,075 as my capital allowance to be utilized for that year. Do you understand? So
Yes,
what I'm
I
saying is
see.
that of 18,012 can be utilized, while the balance will be carried forward to the subsequent year.
Okay. All right. Thank you.
You're welcome.
Hello, sir.
Yeah.
Okay, I also wanted to ask about this number of items of this qualifying capital expenditure. Are we not supposed? Does it not mean that the amount is supposed to like increase by the number of items?
No. Is when they give you price, that's when it increases by number of item. Amount means price times quantity.
Okay, sir.
Yeah.
Hello, sir. Hello,
Yes, go
sir.
ahead. Yes.
Please, sir, what's the percentage for restricted capital allowance?
Two-thirds of accessible profit.
Two-thirds of accessible profit.
Yeah.
Thank you very much, sir.
So what do you have?
Five
53,493.48.
493.48.
So I have total profit here. Total profit
Total
here is
profit
nil.
should be nil.
Good. So CIT at 30%.
Nil.
Nil agree.
Yeah.
CET at 2.5% of accessible profit. How much do I have? So that's 2.5% to 54,145. What do you have?
1354.
1354. Like this?
Yes, but someone should confirm. That's what I got.
Now, please, whether the
No,
examiner has
1489.
1354.
okay, don't worry, I will set to it. 0.025 times 54,145 is 1354.
1354.
Yeah. So now, if that's the case, so I will do minimum tax. Whether the examiner asks you or not, please always do minimum tax. Whether the examiner asks you or not, always do what?
Minimum
tax.
Good. Our minimum tax is 0.5% of accessible profit, less frank 0.5% of gross turnover, I beg your pardon. Gross turnover less franked investment income. Right? So in this case, I will say, what is my turnover? What's my turnover? My turnover in this question is 382,500.
500, yeah.
Then now, this turnover in itself does not include franked investment income. You notice that it's the miscellaneous income that is including the franked investment income. So please note, it is when the turnover is including the franked investment income, you reduce the turnover. It's going to be an aberration for you to do 382,500 minus anything, because it was not included in the first place. Does it make sense?
Yeah, it makes sense. Thank you.
Welcome. So now let's look at what is in the miscellaneous income.
Sorry, sir, please can you come again?
So what I was saying is the law is gross turnover less franked investment income. So it is when the franked investment income or non-taxable income are already included in 382,500. That's when it makes sense to deduct it. If it does not include, please do not deduct it. Now,
Okay.
the non-taxable income here are evaluation on investment. So it was not included before, so I'll just ignore it.
Please take it again, sir. Sorry, I didn't get it.
The formula says, please listen up now. Formula says turnover less franked investment income. And the reason for their formula is because it is of the assumption that the franked investment income is already included in turnover. So if the franked investment income are not included in the turnover, please don't deduct it. Does it make sense?
Okay.
Yes, sir.
Okay.
Because I to be stated that the turnover, the frank investment was not
It's not included.
No, they will not state it expressly. But in the case of this question, sorry, just a minute. I want to beg your SFM lecturer to hold on for me for 10 minutes. No. All right, so where did I stop?
We're talking about the frank investments.
So I was saying that it will only make a few sense or some sense to deduct if it is already included. So if it is not included and you deduct, it's like reducing the value. Right? So the examiner will tell you, or you will know by yourself that it is included. You see that the examiner stated turnover and still stated miscellaneous income. Now you notice that it is included, your miscellaneous income is inclusive of the frank investment income, but not in turnover. Do you understand? Hello.
Yes, we're getting you, sir.
So now you have excess on evaluation. The miscellaneous income should be added anyway because they are part of the income of the guy. Those are what makes the gross turnover.
Sir, maybe the question is, some of us want to know what is frank investment income. I'm sorry, sir.
Frank investment income basically is dividend income that's already
Is
suffered
what, sir?
with dividend income that has already suffered withholding tax.
Okay, sir. Thank you.
Okay. Welcome. So now let's look at this now. Excess on revaluation of investment is non-taxable. We don't include it. Dividend income is franked investment income, so you don't include it. But other income is taxable, so you include it as part of the income for this guy. So what do you have? 6830. Right. So what do you have? What do you have?
3893.
330.
389,330.
Yes.
Then you have minimum tax of 0.5%. What do you have?
194,665.
No, so it is it is 0.5%, not 0.5 times. So it's one thing you want to take note of. It's 0.5 over 100.
1946.6.
1946.
0.6.
1.65.
So let's say 0.7, Abby.
1.7
Yeah.
time.
0.7.
Right. So TET at 2.5%. We now have our same amount, 1354 point what? 2 point nothing. To total tax liability. Let's go ahead.
3300.7.
So that's all. So in the next class, or my next class, I'll be discussing. So I'll be discussing dividend provision with you in the next class, and then possibly we can. I will send the draft report to you. It's something you can look at before the next class. It's just a format issue. But do you understand what we've done so far?
Hello, sir.
Yes, sir.
Yeah.
Hello, sir. Good evening.
I don't understand that restriction.
Do you understand what?
The restriction, how you get 18,075 naira.
So how much is available is restricted to the total amount available.
Okay.
You cannot give what you don't have, right? So capital allowance is restricted for this guy for agriculture, for manufacturing. It is restricted to the amount that can be utilized because you cannot give what you don't have.
So when you apply the two-thirds of the accessible profit,
That's for any other company apart from agriculture manufacturing.
Manufacturing.
All right. Any other question?
Yes, sir.
Sir, please.
So please show
Hello?
the
I didn't get you.
The ones that are allowable expenses and non-allowable expenses.
I didn't get you.
For the allowable expenses, how do we know the ones that are allowable expenses and disallowable expenses? Is there
Like
a note or is that to that?
Yes, I explained at the beginning of the class. I guess you came a bit late. I'd explained the beginning of the class, and I also said that the more we solve questions, the better for us.
Okay, sir. Thank you.
You're welcome. So I will not.
Workings of the capital sir.
You have what?
Fill the
I have
capital
a question,
allowance.
please.
Yeah,
The
please go ahead.
workings.
Okay, I wanted to ask if they are in capital allowance, if the first year is prorated, the second year, are we going to charge it in full or I'm confused? That this one now is not prorated. If we don't have up to 12 months, and we prorate the first year for annual allowance. Subsequent years, how do we calculate this?
So just do the tax return value divided by the remaining useful life of the assets. Does it make sense? Hello?
Okay, sir.
Sorry,
Yes,
sir. When are we expected to prorate?
Divided by the remaining useful.
Hello, sir.
Yeah, go ahead.
Please, sir, can you hear me?
I can hear you. Please go ahead. Stella.
Okay, please, sir, this accessible profit. No,
Yes.
sorry. How did we get this tertiary education tax at 2.5 of the accessible profit? Is it the 2.5 or 59,560, or which of these figures, please, is the accessible profit?
Yes, 59. No, not 59,560.
59,560.
Is that the
2.5
figure?
or 59,560.
No, it's not 59,560. Oh.
No, it's 54.
54,145.
Yeah.
Okay, thank you, sir.
No problem.
Hello,
Okay.
sir.
Please,
Yes.
sir, when are we
Hello, sir.
expected to prorate?
Hello, sir. So my
Yes, I can
question
hear you.
is, you made mention of something. I just want to be sure that I got it correctly. That if, for example, an asset is bought, let's say during the year, let's say around like March, that asset is going to enjoy the full annual allowance. We don't need to prorate, right?
Yes,
Like we only
provided the basis
prorate.
period. Provided the basis period is
Okay,
not
we
of
only. Sorry, sir.
I said you only prorate if your basis period is not up to 12 months.
Okay. That's usually maybe when we like commence the business and all.
Correct.
All right, sir. Thank you, sir.
Sorry, sir.
Hello,
My
sir.
question is this. The year used under capital allowance, is it from for example, under building, is it from 2016 to 2021 or 2022?
So a child does not become 1 year old the day he was born.
Yes.
So it's going to be a year after. So you count it a year after up to 2021.
Okay. Yeah, thank you.
You're welcome.
But
So
we didn't do
2017.
basis. Sir, but we didn't do basis period when we were calculating the capital allowance.
It's not necessary because it's not a commencement question. It's only necessary when you're doing commencement. If there's no gap overlapping, the basis period for accessible profit will always be the basis period for capital allowance.
I think it's only for commencement and cessation.
Yeah.
So, sir, when you use the allowable expenses, because in the question here, we only use the allowable expenses by adding them back. So I was thinking maybe you add back the allowable and then deduct the allowable before you know around at your applicable profit. But only one way.
It's only if you are doing so. If you check the format I gave you, it's a two-way thing. It's either you do taxable income less allowable expenses or net profit add disallowed less non-taxable. Whichever works for you is fine, but I always advise the second one because it's the fastest.
Okay, that means the two cannot come in at a time.
No. It's either of them.
Okay. But I'm always thinking that the two allowable, you add it back to the allowable. Just I was thinking that is how they used to do it. That's why I was just looking at it. Only one side that is there.
Okay, it's either of the two. Yeah. So I believe we do not have any other question, Abi.
Yes, sir, I have a question.
Yes, Justin, please go ahead.
Okay, please, sir. My question would be on that minimum tax computation.
Yes.
I understand your explanation on why we did not less the frank investment, but I want to ask why we added that operating income, that's 6,830.
You've answered yourself. To be honest, you've answered yourself.
How,
So,
sir? Sorry. I said house, sorry.
Okay, no problem. It's fine. I only wanted to. So you said it is operating income, and you asked it why should we add it to income?
Okay. So that is once we have other income aside them frank the investment, we should add it to the turnover.
And because they are income, so they all form part of turnover. Simply means all income that the all taxable income that accrues to the entity in a year of assessment.
Okay, thank you.
You're welcome. So you see how I said you've answered yourself already.
Yeah, I get now. Thank you.
Yeah, you're welcome. Any other question?
Sir.
Yeah, Johnson.
Okay, so good evening, sir. Once again, please, I want to confirm something on this minimum tax computation. You know, we have the 0.5%, which is the, and or in what basis can we use the 0.025 percentage? So,
It was
secondly,
in
assuming that
it was in 2020. My memory serves me right that we used 0.25%. I think so. It was in 2020 we can use. So any year other than 2020, then it became 0.5%.
Okay. Then secondly, assuming that we have we compute for our company income tax in this question, and we also compute for our minimum tax, which one would
The higher
okay,
the
the area
higher
okay.
Yeah.
Okay. Is what that authority would go for, right?
Yes.
Okay. All right.
Hello, sir. In your screen, can I see your screen? I saw calculating like educational tax twice. I'm looking at it now. I want to see something, sir. Sorry.
It's the same amount. I only brought it down, not that I'm calculating it
Okay,
twice.
okay, you put it down. Okay. It's okay. It's okay, sir.
Another question?
Sir, please try and send the notes for us.
Okay. I'll send the notes. Any other question?
Please help us always send the notes so that we can store it and go through later. Please, sir.
No problem.
Thank you very much, sir. Good night.
Welcome.
Okay, sir. Good night.
Good
night.
Thank you, sir. Good night.
Thank you, sir.
Yeah, bye-bye.
God bless you. God
Good
bless
night
you.
and God bless
Thank you.
you.
God bless you.
Amen.
Thank you very much and good night, sir.
Yeah, good night. Regards to everybody.